Hello everyone, I hope you are doing good. Today I will be talking an important topic, how the double or triple calendar performs when the volatility crashes. So a lot of you guys asked me question in the comments like how my double triple calendar strategy performs when the VIX is dropping drastically. So I thought I will make a dedicated video for you guys. I will cover some sample scenarios when VIX drop drastically, how the calendars this double triple calendar performed. So theoretically, we know calendars are positive vega trades. So downward movement in volatility can give you losses in calendars. So is it hold true for double calendar when you are doing double or triple calendar? Do I make profit or loss in VIX downward trend environment? If I make any, how much profit or loss do I make? Do I do any adjustment to make exit in these scenarios if I'm making any loss, and how much percentage is it? So I hope you will like this and learn a lot from this video. So please like this video so it will promote on YouTube and other people can also get benefited. Those who are new to my channel, I trade double triple calendar spread almost every week for consistent weekly income. My profit target remains 10%. I have created a dedicated video with a complete guide. So I have given the link on top of your screen. You can check out that video as well. So I will be talking everything about this strategy in that video. So please check out that video as well. I also subscribe to my channel so you don't miss out any future video. I also have Instagram and Twitter account where I trade post my latest trade, so you can also follow me on my Instagram or Twitter, whichever you prefer. So now let's start the video. So recently, VIX went down a lot. So if you see on March 7th, VIX was around 36 and it went down to some 24 points. So assuming if you have entered a trade on March 7th, how the double or triple calendar would have performed. So I will cover a back test on this environment. I'm using ThinkorSwim, this on-demand platform where you can go back into history and check how they have all the data, all the option data, so you can back test your strategy. So I will back test for this environment. Also on 27th of January, we saw VIX was around 32 and it went down drastically in the next 4 or 5 days to as low as 20. So this was a big some 12 13 point move. So I will also cover one trade, how this the double or triple can perform in this environment. Also I took one example from March, not March, the 2020 crash. I didn't took the March example. The reason being the VIX went down, like it was 80. I won't recommend you guys to trade calendars when the VIX is at 80. Although these are like very rare events when we you will see VIX at 80. But I have back tested my theory here also. So at the end of the video, I will let you know, I guys know how much loss or profit if you would have made if you have entered a trade at this 80 points VIX. In this video, I will have taken example when VIX was around 40. So this was a good example when VIX was at 40, but the it fell down slowly. And you guys know I remain in a trade almost like from 5 to 10 days. So I won't have seen much VIX move here. So I have taken, this is a good example. Here you can see VIX went down from 40 to 23 very drastically in like very less few days only, just 3 4 days 5 days only. So I have taken this example as well. So I'm sure you will learn a lot from this example also. So now let's start the video. I If you haven't liked the video, please like. I'm putting a lot of effort to create a videos like this so you get a lot of knowledge and inspiration to make trades like this. So please like. Now let's start this video. So let's first talk about the 7th of March example when VIX was around 36. Now let's go to SPY how it was on 7th of March. So let me go back to SPY at 27th of March example. Here it is. So here it is. So okay. So on 7th of March, spies are moving around this, and VIX was at its peak during the close. So we will enter a trade on 7th of March when the spy was around 420 points. So let's assume we entered on 7th of March around the closing time, double or triple calendar spread, and we'll see how it performed going forward. The strike prices I choose will be like almost 25 points, because in VIX when it is around 40, I go with some 40 points far. Also, I checked that straddle prices. So straddle prices were around 12. So I gave extra cushion. I've checked the support and resistance. So there was a resistance here as well. So 445 seemed fine to me. Also, the lower side again, to make it equidistant, I will be going to 395. Now the dates for the calendars. So if I'm entering on 7th of March, as you guys know, I go at least 14 points for 14 days to expiry calendars, and I use only Friday expiry weeklies to create these calendars. So if I'm entering any day between 7th of March till 11th of March, I will go next to next Friday, which is 25th of March. So I will be selling 25th of March, and I will be buying 1st of April option to create the calendar. So the dates will be selling 25th March, buying 21st of April options to create calendar, and I can end like whenever I'm entering in the week of 7th of March. So if I'm entering any day between 7th of March, 11th of March, I will be choosing these days. 25th March selling, 1st of April buying. So let me go to this Excel sheet. I have taken this all the calendar prices from ThinkorSwim on demand platform. So I'm going back to 7th of March, and I'm getting these data from there. So on 7th of March, the 395 strike price calendar was $140. 445 strike price calendar was $93. So in total for this double calendar, it was costing $233. If we wanted to make it a triple calendar, the cost was 159. So in total, this will be like triple calendar will be adding these two, so it will was $392. So this was March 7th. March 8th, VIX went down from 36 to 35, and SPY moved down also. It went down to 460. The double calendar was in a loss of 9%, and triple calendar was in a loss of 6%. On March 9th, VIX went down to 32. The double calendar is in a profit of 4%, and triple calendar is in a profit of 3.44%. So this is like you interesting. So you see VIX is going from 36 to 32. It is dropping. At the same time, SPY is going towards 427 from 419. So because of VIX falling, you are making a loss, but at the same time, the directional move of SPY is giving you some profit. So this guy, the 445, this is giving you profit. This 445, because it is becoming from like it was little far, like 25 points far at the start. Now it is almost becoming, it is going towards at the money. So this is becoming expensive. So this is giving you profit. The 395 is giving you small losses. So overall, these are like fight going. VIX is giving you losses, and this directional move is giving you profit. So overall, here you are in a, overall profit. So this is what it's happening here, and that's why you are making a profit here. In triple calendar, this also gave you small, very small profit. So overall, this gave you little profit here. Going forward on March 10th, the VIX is down to 330 points, and SPY is at 425. Now the total profit of double calendar is loss. It is a loss of 5%, and the triple calendar is in a very small profit of 0.51%. Going forward on March 11th, the VIX is down to 30, SPY is at 420. So SPY went up again. So it went up, and sorry, it came back down to 420. So you can see add the money is now in profit, because it went up, SPY went up and is back down to 420. So it is add the money again. So this is in a profit of 20%. The double calendar is in a loss of 2.79%, but this triple calendar is in a profit of 6.6%. March 14th, VIX is down to 31, and the double calendar is in a loss of 7%. Triple calendar is in a profit of 4%. March 15th, double calendar is in a loss of 2%, triple calendar is in a profit of 11%. Since SPY is wiggling around this, so it is 420, 417, so it went down, then it went up, so it is wiggling around. Because of that, the add the money calendar is giving us profit here. So here you would have already, you could have already exited the trade making 10% profit, but the double calendar is not making good profit here. So now on March 16th, SPY went up to 435 and VIX is down to 26. Double calendar is in a very small loss of 0.2%, and triple calendar is in a profit of 2.3%. March 17th, SPY is at 441. So now you can see, like, here the 445, it is almost becoming at the money, the upper calendar, the 445 one. So here you are seeing a big profit. The lower calendar is giving you small loss, but eventually it is a profit, and you are making a, overall you are making a 5.58% profit. The triple calendar, now this the add the money calendar, which was at the money, initially it was in profit, but now it is starting to giving you loss. So here the triple calendar is in a small profit of 1.53%. March 18th was a Friday, so if you guys remember, the expiry of this calendar is 25th March, and I don't remain in the trade for in the last week of expiry because of the Vega move. So my deadline to exit the trade is 18th of March. So I lock, if I was in this trade, I will lock my profit or loss, whatever it is, I on this 18th of March. Unless I do sometimes I do adjustment, I can go one more day, like till Monday, but I will exit by Monday, but that is also rare. I usually exit by Thursday, like this March 17th or March 18th I will exit. So in this example, the double calendar would have given me 7.51% profit, and this triple calendar would have given you a loss of 6.51%. So here you can see, like, even when VIX went down from 36 to 23, which was a big move of VIX, the double calendar is in a profit of 7.5%, and triple calendar is in a small loss of 6.51%. So you can see this double triple calendar are so great. So even in the very bad scenario, they are giving you profit or very small losses. So I will always go with this strategy. It is a very good strategy, it is a robust strategy. Yes, it can give you profit losses, but those losses are not very, you can play your risk to reward ratio. So few weeks will be profit, and few weeks like this might be giving you losses. You can play around. So you can, sometimes I go just with double calendar if I feel like SPY will move somewhere. So I don't buy at the money, because at the money are expensive. I don't go with triple, I go with double. Sometimes what I do, I wait for SPY to move, then this 420 calendar, like here in this example, we were able to see at one point it was in a loss somewhere. Yeah, it was small loss. So sometimes what I do is I buy at this point, at the month, the 420. So this way I am, reducing my cost basis to enter the triple calendar. So these are different scenarios you can do to make triple calendar and get profit out of them. But in worst case scenario, even if you entered triple calendar from the start, you made a loss of just 6% from this trade. Now let's go to another example. So this was this March example. Now let's go to January. Let's say you entered a trade on 27th of January when VIX was around 32. So now in the next 4 or 5 days, here there was at least a little bump, and then it went down. Here it went down drastically. In the next 5 days, it went just down. The VIX went down. So let's see how this performed. So this is, let's say we entered the trade on 27th of January. So now let's first see what was the SPY price on 27th of January. So 27th of January we were around this 430. So now let's go back to Excel sheet. So this is the 27th when the SPY is at 430. Again, let's first pick the dates of the calendar. So let me go to January. So we are entering the trade on 27th of January. So we will skip this week. So 4th of February we will skip. So we'll be selling 11th of February option, and we will be buying 15th of February option to create a calendar. And we will be remain in state max to max till 4th of February, since 11th of X is the expiry of the calendar. So 11th of February will be my selling date and 18th of February will be my buying date. And since it was 430, so I will go around 25 points like last time. So 25 points lower will be 405 and the upper will be 455. And if I go with add the money as well to create a crippled calendar, the add the money will be 430. So in total the double calendar would have costed me 194 on 27th of January, and triple calendar would have costed me $346. Going forward, on January 28th, VIX went down already by 3 points to 27.65. SPY was up and it went to 441. So here, double calendar is already in profit of 13.92%, and triple calendar was in a profit of 10%. So if I would have been in this trade, I would have exited the next day itself because these are 10% profit. But for some reason, let's say you were not able to take this profit, or maybe you didn't enter on 27th of January and you entered on 28th of January, then let's see how this trade would have performed further. So January 31st, the VIX went down to 24.82 and SPY was at around 450. So this double calendar was in a profit of 10.57 and triple calendar was in a profit of 2%. February 1st, VIX is down to 21.96. So double calendar is in a profit of 2.58%, and triple calendar is now entering the loss territory. It is in a loss of 12% since SPY has moved very much. So from 430 it has moved to 452. So triple calendar is starting to give you losses. So now, like in one of the scenario, what I would have done is I would have entered the trade. Let's see on the, if I would have entered this day, I would have exited here. Let's say if I would have entered here, so I would have entered this double calendars, and then maybe here when it was in a loss, this middle calendar is in a loss. I could have bought, this also at the 431. So this is also one way, one strategy. So you can perform, you can design your own strategy. Anyway, so going forward, on February 2nd, VIX is 22.08. The double calendar is in a profit of 3.09 and triple calendar is in a loss of 12%. February 3rd, double calendar is in profit of 15%. So this is a good time to exit. If you are in double calendar, it is 10% profit, better to exit. Triple calendar is in a profit of 5.49%. February 4th, this is the, Friday, so I would have exited. Let me show you again. So February 4th is Friday and the expiry of this calendar is 11th of February. So I would exit by 4th of February. So let's see. So the double calendar was in a profit of 10.82% and the triple calendar was in a profit of 6.36%. So you can see even when VIX went down from 30 to 23, these calendars would have given you 10.8 or 6% profit. Even you, if you, let's say you would have entered on this day, let's say I actually, it happened with me, I entered this triple calendar on January 28th. So I bought at 382, so instead of 346 I invested more and I bought it at a premium price of 382. So my total loss was like 10 minus 6, so it was somewhere around 5%. You can see my that video as well, I have posted that here also. So I made a small loss in this trade. So I entered one day late, so if I would have entered before, I would have made a 6% profit, but that's fine. So I entered little late, I paid extra, at a higher price I entered. So I made a some 5-6% loss. But that is also good, like in VIX falling so much from, you can see here VIX fell down so drastically from 32 to 20. Every day it was just falling. Even then you can see it is not bad, like you didn't made like big losses, it is like okay losses or some good profits. So this is very good. Now let's go back to this March, sorry, the 2020 big drop of VIX which I was talking about. So this is the one which I was talking about. So the VIX was when going down from, on 30th of October, VIX was at 40. It went down to somewhere around 23. So let's assume we entered the trade on 30th of October of 2020. So let's go back to the Excel sheet and let's see how it performed. So this is the example I was talking about. So October 30 of 2020, the dates, if you will see, it will be like again the same example. So I will go at least 14 days. So I'm selling 13th of November 2020 options and buying 20th of November 2020 options to create a calendar. The I will again go with 25 points in this example also because VIX was high. So I will first check the straddle and then I will check the what was the supports and resistance. So let's say assume I got these calendars. So the calendar prices was 157 and for the add the money one was little expensive 129. So you can enter it this day or enter later on if it becomes cheaper. So triple calendar would have costed you $286. So now let's see. On November 2nd, VIX was down to 37 and this double calendar was already in profit of 12% and triple calendar was already in profit of 14%. So I would have exited this trade then day itself and I took 10% profit. But anyway, let's go forward and see how this trade performed further. So on November 3rd, VIX was down to 35. So the double calendar was in a profit of 3.5% and triple calendar was in a profit of 3.85%. On November 4th, now SPY is at 343. We are still within our trading zone. So this is good. So SPY is at 343 and VIX is down to 29.57. And the double calendar is in a profit of 14.65%. So there's one more time when you could have exited the trade and made 10% plus profit. The triple calendar was in a profit of 5.9%. So since SPY has taken the move, so from 326 to 343, which is a big move, the add the money calendar has started to give you losses now. So now on November 5th, VIX is down to 27.58, SPY is at 350. So the double calendar is at a profit of 24%, and triple calendar is a small loss of 1.4% because SPY is now too much away from the 325. So 325 SPY has already moved 25 points. So this 25 was very good point. So now we are at almost this 350s at the money. So now we don't have any upper calendar, but good thing is we are we should have exited by now because it is 24%. So better to lock profit. So this is the third day you could have locked your profits. November 6th, we are again today also at 350. VIX is down to 24.86. Double calendar is in a profit of 22%. Triple calendar is in a loss of 6.6%. Going forward, I would have exited by this time for sure because this was a Friday. So I don't go till the expiry week, but this November 9th starting was the expiry week. But just for documentation, double calendar is in a profit of 21% and triple calendar is in a loss of 16%. So you can see, like, even in this scenario, like VIX went down so much in this was a drastic move. 30th of October we entered at this point when VIX was at 40, and this is like how much, November 6th. So November 6th, this is November 6th, and the closing we are at here, VIX is at 25. So it went down from 40 to 26, which is like 15 points. It fell down by 15 points, and even then we got so many opportunities to take 10% profit. Even if it was a triple calendar, we didn't get any opportunity to make 10% profit. But even then, the losses which we made out of this trade was not like big. It was like 5 6 or 15%. So you can maybe in this trade you could have given 1 or 2 week of your gain, last 2 week of trades gain. But this is not like big. So the calendars are like consistency game. So do it almost every week. Aim your 10% profit, exit it, and few weeks might be rough for you guys. Like this is a good example, this was a very rough week. Even then, you this double triple calendar could have given you small loss or good profits. So I will highly recommend you guys to try paper trade, at least the double triple calendar spread, so that you get good knowledge out of it and maybe get motivation to try the double and triple calendar yourself. If you like this video, gained any knowledge out of it, please like and subscribe. The last bonus thing which I wanted to show, like I promised I will let you know, like if you would have entered a double or triple calendar spread on the this day when VIX was at 80, how much loss you could have made. So I back tested it and we did hit like 30% loss once. So you could have exited at 30 or 40% loss. So in this very bad scenario, it was very hard, when I was back testing, it was very hard to capture SPY. So I would have, if I would have entered this day, I would have taken the 30 or 40% loss and have exited the trade in this. But this is a very, very rare, out of the blue scenario when VIX goes to 80. And I don't recommend you guys to trade at when VIX is at 80 point. Don't trade the triple calendar or double calendar, but other weeks, like when we are in these type of scenarios or like this, you can trade triple calendar and make consistent weekly income. So if you gained any knowledge out of this video, please like and subscribe to my channel. Thank you. One disclaimer: all the information I shared in this video is for your knowledge purpose only. Do your own research before you place any trades. Thank you. See you in the next video.